We're talking about GL for a rental property. So we have a situation where a home builder is buying a home, renting it out to others, and then eventually tearing it down and building a new one. So when they buy the home, they've got a home loan, and there's a general liability portion of that and a property portion to that. Now, as a home builder, they have GL construction insurance, and as a owner of this property, they rent it out before. So they get a loan, they get coverage on the GL and the property, and we put a policy in place that we call the occupied property or package policy, because it's got general liability and property for that type of coverage. And then afterwards, it is, once they tear the house down, then it's covered by their general liability policy as a builder and their builder's risk policy for the property portion. So the question is, if the bank's not requiring property coverage, should they still get property coverage and put it on the occupied policy? Because there's a general liability portion of the policy that is going to cover whatever bodily injury, third party bodily injury or property damage that occurs on the premises. And so that GL could just be covered by their business's general liability policy. But the carrier is not really looking to cover that exposure. Technically it fits in that exposure. And so I'm just looking, you got to check their policy to make sure there's no exclusion for a rental property, something like that, which is not typically built into general liability policy. But it might be safe just to pick a low limit, put it on the occupied policy, even if the bank is not requiring it, because the insured is not concerned about covering the property if it's a house they're going to tear down, but still having it on there makes sense because that's a policy that's written for that type of exposure. The commercial package occupied policy has GL and property, rather than the general liability policy with no property coverage for the home builder.